Hello everyone, this is Alok Sasmal from FinIQ. Let me welcome all of you for being a part of this unique initiative started by Equalify to bring all the ecosystem player in the market, especially alternate investment space, to create a strong ecosystem from keeping two aspects in mind. One is industry, investor at large, distribution fraternity, and also to create a best practice as a self-regulatory authority or self-regulatory participant of the market, so that tomorrow all the stakeholders of this industry comply with the regulator and make this industry grow efficiently. So myself, Alok Sasmal, I represent FinIQ for India business. Let me highlight today's coverage, what we'll be covering in next 40-45 minutes. So let me break down today's session in 4 or 5 parts. First, I'll touch upon the context, why we would look at platform for a financial product, especially which is alternate investment space, which is largely been placed to kind of a HNI, ultra HNI investors, how platform can play a role, and how this business or how this industry has evolved in last 50 years. Then we'll highlight some key challenges from the regulatory perspective, and also how as an industry are struggling or finding an opportunity but not being able to reach out to the right set of audience or right set of stakeholders. Then we'll bring the relevance of a platform, how this platform can address both the challenges or both the opportunities to connect the dot and help this industry to grow. At the end, we'll take a couple of questions from the audience. You can type your questions to the chat box. We'll address those. So let me set the context today. We are actually living in a platform era. All the names you see on the screen are very much accustomed to. In fact, rather, we are part of that in our day-to-day life. So if you think through, we are actually part of some or the other platform in our day-to-day life, be it ordering our food or booking our travel plans or commuting from different places or even for our entertainment. So if you try to find a dot, these are not there 10-15 years back. But this platform got a solutions, and that's how today all these names on the screen are reaching out to the large set of audience to bring out best user experience, bring out larger player into the platform, and creating an environment where a lot of ecosystem players are growing together, so as the industry is growing. So why not that could happen in alternate investment space? Although you all would be agreeing to that this has already started in product like mutual fund, that has already started in product like equity trading. Now this is the right time to bring this kind of environment or ecosystem to alternate products. So let me quickly run through what has happened in this particular space in last 50 years. not only in India, but also you would echo that has happened in globally also. So if you who has been into the market for last 40, 50 years, they can correlate. During 80s or 90s, most of the financial institutions, state industrial corporations were the part of this ecosystem. Because that time, any alternate investment was considered to be risky. And as a regulator, they wanted to confine it to the institutional investors only. And that was only supported by the institutions, large financial institutions, state government through their state industrial corporations. And that's how the ecosystem was created. With the emergence of, as the market grown, we call it a proof of concept. So as the proof of concept started building up, during 1990s, market has started getting more proof of concept. Then regulation came into existence. So the venture capital guideline 1988 came into the existence to monitor the working of venture funds and just to bring together a lot of good practices, best practices in the industries so that there is not any malpractices. As market grown, during 2000, this space observed a lot of private capital interest, not only from India, but also global private capital started coming in, showing their interest. Till 2012, it was more of a fragmented, but in 2012, SEBI came out with a regulation bringing all kind of alternate investment funds, be it a private equity, private debt, venture fund, under one umbrella, and brought together a regulation that was SEBI Alternate Investment Fund Regulation 2012, under which three categories, I think all of you are very accustomed to. So they brought three categories, category 1, category 2, and category 3 came into existence. Now, from 2012 till recently, very recently, even in last 8-9 years, this particular industry has evolved with the emergence of the market, and mutual fund to some extent are the large contributor for the growth of alternate investment fund as well. Mutual fund has given a direction to the investors, advisors, market participants to invest into non-traditional investment, investing into the growth of the economy by investing into companies who are directly or indirectly contributing to the economy. As market evolved today, that mutual fund market has become pretty large, almost 38 lakh crore AUM. But along with that, it has brought a lot of challenges also. That challenges are from the two directions. One, from the innovation. Second, from the investor protection. So in terms of the innovation, since mutual funds are addressed to all sets of investors, right from a retail investor who wanted to invest as low as maybe 500 rupees to a HNI, ultra HNI investor who wanted to invest in several crores. SEBI as a regulator wanted to protect the marginal investors. So they brought in regulation from time to time to protect the investor interest. That restricted the fund managers to do innovation as they wanted to bring into the table. That has contributed to the need of alternate investment space, where there has been some relaxation compared to mutual fund, since it is restricted to the investor only those who would like to invest 1 CR and above. Since that industry has grown, now today, if you see the data, it has grown to as big as 7 lakh crore, almost a $90 billion. In terms of the participant, fund managers or registered investment funds, the number are growing year after year. Today, it has crossed 960. Market has become a global market now. Global investing is a new thing. To hedge the portfolio, or you can diversify, you can call it a diversification of the portfolio globally. HNI, ultra HNI investor numbers are increasing. In fact, interestingly, among Asia, India is one of the largest in terms of the percentage growth. As per recent report of Knight Frank in 2022, India has grown its number of ultra HNI almost by 11%, and it is expected to continue for next 5-10 years. As this number of HNI, ultra HNI investor increases, the migration of investors, the same investors from mutual fund to alternate investment fund would see a significant number. Today, as we speak, the number or the value of mutual fund is 38 lakh crore, vis-a-vis alternate investment fund is 7 lakh crore, almost 20% or 25%. This, if that continue, we are expecting mutual fund AUM to touch around 1 lakh crore in next 5 years. Simultaneously, it would be this alternate investment fund also would grow to around 20 lakh crore. So we are seeing this kind of traction in the market. Now, as I said, we'll touch upon the perspective. As any market evolves, not only in India, but also globally, as market evolves, there are two types of concern. One is related to investor, one is related to the regulator. So in terms of the regulatory perspective, if you look at, I've just highlighted a couple of latest concern or latest regulatory perspective, which is parallelly coming to global fund managers as well as to the Indian fund managers. As you know, recently, a lot of incidences has happened in Indian market, especially on the debt side. Regulator realized there are still some of the areas need to be addressed. That's why this particular part of regulatory oversight has become very important. So for all the prospective alternative investment fund manager who comes with a lot of ideas, they need to keep this in mind. So these are some of the recent regulatory perspective which has came to the forefront. Like in US, you can see the derivative value at risk. When any portfolio is taking exposure to derivative, they need to monitor continuously. Fair valuation practice, uniformity in communication to all the investors. Similarly, in European Union, we have seen MiFID II implementation post global financial crisis. This has become more relevant. Process audit in terms of the valuation, especially in hedge fund, or we call from Indian context, it is CAT3 AIF, which is a long shot as a strategy. NAV calculation, disclosing the process audit, leverage ratio, related party risk or related risk to the financial instrument, control on investment advisor marketing. Globally, also, it has become very, very important area to address for the purpose of investor protection. Similarly, if you see, India is also following global best practices. SEBI always has become very, very proactive to address any concern or probable concern may arise for the benefit of investor protection. Last year in 2021, SEBI came out with some revised regulation. One of the regulation is to bring out best code of conduct for the funds as a product, fund managers, directors, trustees. So each and every stakeholders become accountable for the fund. Similarly, conflict management, there should not be any related party transactions. Fund managers advising onshore or offshore fund simultaneously should have parity in terms of the advisory. Standard template, SEBI has already came out with a standard template for the PPM. Disclosure of IC meeting outcome has become mandatory. Recommendation of fund manager across different fund, it should have a parity. Similarly, as global marketing of financial products, especially the intermediaries, there has become a key importance for avoiding any kind of mis-selling. So this control or regulator not only controlling to the manufacturer of the product, but also the distribution side of the product. So SEBI recommended a lot of certification program for the distributor of PMS or AIF. All the distributor has to be qualified or certified. So all this put together as an industry, it is growing with a controlled step so that at the end, investors' interests are protected, and as an industry, it practices as a best practice norms. Now, some of the challenges I would like to highlight, and I'll cover how a platform as a concept or platform as a would address all the challenges, be it a regulatory challenges or be it a industry level challenges. So if you see, as I mentioned, the investors of alternate investment funds mostly migrated from a traditional investment of mutual fund. Because if you look at mutual fund, normally invest in a listed universe. So if you look at the mutual fund portfolio, underlying portfolio, it's largely diversified its AUM. In case of equity, the total AUM would be around 17 to 18 lakh crore, diversified across 235 stocks. If you see all the underlying equity put together, so entire 13 lakh crore are diversified. Only 230, 250 companies in country like India are relatively skewed investment distribution. For India, for a country like India, it is required to channelize the household saving, investors saving to a broader set of enterprises so that it multiplies and contributes back to the economy. So in a way, alternate investment funds or alternate investment strategies de-risk this concentration risk of the economy, and it brings opportunity to diversify for the investor. It helps to diversify their concentrated investment to this 230 or 250 set of companies with a lot of innovative idea toward investing into infrastructure project, investing into startups, investing into privately unlisted companies, private credit opportunities, and also some of the investment strategies in listed space also. Similarly, some of the physical asset investors who invest in physical real estate, physical gold, or any other precious metal, they also gradually migrating to financial assets. This alternate investment fund as an industry also bringing out this opportunity to invest into this kind of asset classes more organized manner and bring in best practices so that it brings not only a process but also transparency and liquidity. Now, if you look at in terms of the number, alternate investment funds are today more than 960 as a number, vis-a-vis there are almost 47 mutual fund companies. So if you see how this structure is emerging, so a lot of fund managers who have experience with the large mutual fund companies, research houses, foreign institutional, domestic institutions are coming out with their new ideas, bringing out innovative products to offer the set of investors who has appetite, plus who wanted to diversify their concentrated investment to some of the alternate opportunities. Alternate investment fund as industry are offering that. But simultaneously, it is bringing some of the challenges for all these boutique fund managers of this AIF. If you see 960 fund managers put together manages only 7 lakh crore, vis-a-vis 47 mutual fund companies put together manages almost 40 lakh crore. They face their set of challenges to reach out to their target audience in terms of the distributor, advisors, or the investors. Because as a structure, these are very lean team. Mostly we have observed these are fund managers, their co-fund managers, and some of the analyst team, and maybe a limited 2 or 3 set of market development professionals or team members. With this team, it is very challenging to reach out to the broader set of distributors, be it a large bank, wealth outfit, independent financial advisors, RIAs, which maybe put together would be more than 100,000 or maybe 1,20,000 roughly. So although the product innovations are there, innovative products are there, but there is no market ecosystem to reach out to the right set of audience or right set of investors or the distributors. There comes the platform. Platform solves by connecting both the dots, also simultaneously giving the best of the experience to the regulator and to the distributor and investors. This platform also addresses a lot of other challenges related to market, operational risk, business risk. I'll touch upon those areas, how a platform can solve. Let me give you the brief background of FinIQ. So FinIQ is a financial engineering company. Started back in 2001 in Singapore. Today, it is a global financial software company headquartered in Singapore, operating across 13 countries globally with a manpower of around 500 people worldwide. It has a development center, global development center in India. Although it had a global development center in India, but last 20 years, it has served globally to almost all top 50 financial institutions, largely global financial banks. It also started what we are trying to bring into India. It started back in 2001, similar way. That time, there was one innovative product in deposits from the banks in Asian market called structured deposit or structured instrument investment, which was more of a deposit with an embedded option. That kind of product was also been distributed by the banks in Asian market over the counter. So we also innovated and approached them to create a platform for them so that they can scale up this business, reach out to their larger set of bank customers, and bring in best practices, transparent process. And that has become a history today. Today, as we speak, FinIQ transact almost a $70 billion transactions covering top 50 banks globally, right from Bank of Singapore, Citi, UBS, LGT, Nomura, you name all top 50 banks, 50, 60 banks, they all uses FinIQ platform for offering structured product across all three asset classes: equity, FX, fixed income. All those clients who started relationship back in 2001 are continuing with us as we speak today with the framework we have been able to create as a technology company. So we created or offered right blend of two industry. One is a financial market, second is a technology. So as a company, we always focused on a right talent. We hire best of the institutions across all IITs, IIMs, nurture them, prepare them to create a robust solutions for the global banks. Some of the solutions, let me highlight. In terms of the asset class, we cover almost, you can say, all multi-assets today. 12 major asset classes are supported. 25 banks today are on our platform as a liquidity providers. 15,000 bankers, RMs, using our platform today across 21 locations globally. We started our India business last year, created some solutions for Indian market. Some of the solutions I have highlighted here. Distributing a retail bond distribution. So in last 2 years, India has seen emergence of direct investment into bonds. We created bond distribution platform for one of the leading banks in India. We have created multi-asset distribution platform for a retail brokerage firm. We are working on a project bringing in global banks, including Indian liquidity provider, market maker, to act as a liquidity provider to structured product, category 3 AIF. These are some of the new initiative we have taken in India in last 1 year since our operation started in India last year during this month, July last year, 2021. These are some of the names globally. whom we have provided multiple solutions. In last 20 years, started with a structured product. Today, we provide entire spectrum of wealth management, private banking, treasury solutions to all banks globally. Some of the example would like to just highlight. UOB is one of the leading bank in Singapore. They wanted to distribute multi-asset through their platform. We created the entire core system for the banks. Similarly, Mustek in Middle East, Dubai, wanted us to create a full-fledged core banking wealth management platform for them. We implemented entire core platform to them. These are some of the names across different product classes, right from mutual funds, shares, bonds, cash forex, structured FX. Now these three, equity, structured product, FX, OTC, EQ, OTC, is this kind of a similar platform we have created for structured product. Since structured product is also one of the OTC product like alternative investment fund here, we want to replicate the similar kind of structure in India, bringing in all AIF in the country, all these 900 plus AIF on the one side as a sell side provider to the platform. On the other side, bringing in all the distributor, be it a large bank, wealth outfit, independent financial advisors or RIAs into the platform. This is the framework we are working. You must have spoken and interacted or was the presentation of all other cohort partners. We are bringing all of them into the ecosystem, so it parallelly become a technology-driven marketplace, complying with all regulatory norms, complying with industry best practices coming from all the cohort participants, from their experience in their respective domain. And as a technology player, we are connecting both the dots. One side is product issuer and its ecosystem. On the other side, product consumer or distributor, and providing solutions. We call it a two kind of solution. One is core. Core solution is related to the AIF internally for its internal ecosystem related to fund manager, and operational team of the AIF. Channel is distribution of that particular product to buy side, that's the banks, wealth outfit, RIAs, IFAs. So that entire journey become seamless, complying with all the regulatory requirement, market norms, internal controls, checks and balances, risk management. These are some of the pain points we have observed, and I think you would also echo the same. This industry could not grow because of main reason is distribution challenges and also communication to the last mile, lack of resources, because as I said, AI being a thin team, it could not engage the resources to reach out to the all set of distributor to communicate or educate about their product offering. Along with the onboarding of the client, the process, KYC, suitability, thanks to what has happened, technology in last 2 years, maybe this is another way to disrupt the market, but it has also blessed to bring out best of the technology to Indian market as well. We have been able to solve some of the problems that has also emerged in mostly in payment transactions, credit transactions, but it is yet to happen in wealth management, especially bespoke private wealth management, like AIF is a part of. We wanted to bring that into that in this industry, so that this opaqueness of onboarding process, where all of you would agree, the signing of 40-45 signatures, booklet, how to digitize, so that the onboarding process are smooth, the investor experience are appreciated, that increases the business volume without compromising on the safety and security of the investors. Simultaneously, communication related to the product from the fund manager desk to the investor is very critical. This platform also solves that challenges, bringing a parity in terms of the communication to the from fund manager desk to the RM, and through RM to distributor to end client. So there are no discrimination in terms of the communication conveyed to the different set of investors. This is broadly the areas covered by this platform. We divided in 7 subcategories covering venture capital funds, equity funds, which are underlying portfolios are unlisted, equity funds, which is a mix of listed and unlisted both, real estate funds, debt funds, long only Cat 3 funds, which are pipe, long short equity fund, it's more of a hedge fund. So in terms of the functionality, this particular platform would address, as I said, 2 areas, core and channel. Core is related to the internal ecosystem of the fund. Channel is distribution of the product. So as a technology company, this platform would be offered to both the side of the ecosystem. One is the distributor, second is the AIFs. For AIFs, the core would be offered as a value-added service subject to the separate technology engagement. If there is already a technology team, we'll just involve only with the channel as a service. If there is a requirement of a core solutions, as a technology will provide that core solution as well. In a core solutions, we'll be covering all the functionalities during pre-investment stage, connecting all the ecosystem player like merchant banker, trustee, and covering all this like a setup of multi-model portfolio, asset class wise analytics, risk profiling of the product wise, backtesting of the different kind of model, benchmarking. So CRISIL has come out with a AI benchmarking. We are also integrating them in the platform. Second area is investment and post-investment, during investment and post-investment stage, like related to execution of deal. If it is a listed equity, then connecting with the broker, trade processes, confirmation, settlement, and reconciliation of the transactions, as well as limit utilization. Third stage is post-investment portfolio analytics, periodic review, risk management measurement, attribution analysis, scenario analysis, stress testing, and also portfolio internal valuation. Compliance monitoring, which is, as I mentioned, is prime focus and should be a major focus of all the AIFs for creating their goodwill over the period of time. So all kind of compliance monitoring, so that to avoid any kind of regulatory breach, internal investment guideline, and also any kind of addressing if there is any customer mandates. On the channel side, which will be more of a SaaS as a platform, where entire life cycle would be maintained, right from investor onboarding, life cycle management, distributor empanelment and process control, commission, payouts management. Similarly, interactions with AIF ecosystem players, RTA, custodian, trustee, bankers, all would be a part of this ecosystem, connected through API or alternate process, so that the entire transaction becomes seamless. Investor communication, like depending on the fund requirement, be it if it is a CAT3 AIF, then frequent like monthly or weekly disclosure. If it is a CAT 1 or 2, quarterly disclosures, post-investment lifecycle management, everything would be covered through the system. So let me quickly touch upon what are the core solutions. Like a product strategy will help fund managers to create their strategy, aggregate all their like deal generations to deal evaluations, everything will create them as a separate dashboard. That would come, core solution would come as a separate value-added solutions or value-added services. Second is data analytics, product modeling, backtesting. Third is performance measurement and review, rebalancing the portfolio. Next is portfolio level performance measurement. Everything right from a scenario analysis, drawdown, stress testing. Then comes the review, periodic review and rebalance. Now, in terms of the channel, as I mentioned, right from a distributor profile setup to onboarding, product catalog, so the distributor can see all the products they are empaneled with from all the AIFs, which has mutually agreed to communicate through this FinIQ platform, AIF platform. They would be able to see through this dashboard. This is like a detailed product information. They can download all the relevant information from the system itself. And also they can process the transaction for the investor. They can onboard investors. It would be interconnected with the respective stakeholder, be it an RTA, bankers, and this platform became a central repository in terms of the connecting with all the ecosystem players. And also this transaction could be generated from the platform itself. Distributor or the advisor can direct that proposal to the investor. Investor can fill up and return back, and the process is completed. The entire system becomes seamless. Then also we provide workbench to the AMC as and when they launch any product. They can update in the system, distributor commission management, distributor, would be more of a distributor dashboard, how it will look like, how much all the AUM they have invested into, all the AIF they have invested into. It will be a single dashboard. That's broadly I have covered how this platform is relevant, how this would function, and the processes, be it a core process or the channel as a process. That's what about the platform. Would be happy to connect with all the AIFs in the market, all the participants, to get into a detailed discussion. This is my coordinates. If you want, you can drop me a mail or speak to me. My mobile number is also given. Thank you so much. I think we are just completed our allotted time. Thank you for become a part of this session. Looking forward to hearing from you in future. Thank you.